This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on June 15th, 2017. Our time is 8:38 Mountain. Radio show runs 6:30 CHED, Sunday afternoon at 3. If you ever miss a radio show, they are archived 24/7, streaming live for you on Harold's website, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in The World Financial Report on Radio. You will find our podcast. Their podcasting is so popular, and we've been doing it for a long time. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, website rarecoloreddiamonds.com. Our featured diamond of the week is a 1+ carat radiant cut fancy light blue. See this diamond, and it has such a beautiful blue hue to it, at rarecoloreddiamonds.com, featured diamond of the week. As we tape today's program, yesterday the Fed in the United States raised interest rates, and they're now at 1.25%. That means one more rate hike this year. They're talking about next year, possibly 3 to 4. So the Fed committed to raising rates. In Canada, we did see the loonie go up, and a lot of it had to do with some jawboning from the Bank of Canada when they indicated that, well, maybe we might be raising rates sooner than we thought. It was a very generic statement, but it had the loonie jumping up from about 74 all the way to 76. Today, it's popped down to around 75. So a little jawboning on behalf of the Bank of Canada had the loonie popping up just a bit. But we're seeing in the United States, it's a very confusing market, Harold. And you were saying that before the radio show started here today. And I agree with you 100%. One day we see the U.S. dollar make a major move up, and then we'll see gold go down, or we'll see gold make a major move up and the U.S. dollar both go up. It's a very confusing time for investors.
It certainly is, Randy. Again, this low interest rate thing is really wreaking a lot of havoc in the market. First of all, low interest rates are obviously not good for consumers or for us as far as getting any type of return on our investment. So, it used to be that we used to make 10% on our money, that you could retire off of that you could accumulate your money over time, and when you're getting ready to retire, you put your money in a CD or in a mutual fund or in a bank type of thing and get 10%. Now that's never going to happen again. Unless the world encumbers gigantic inflation, which is not happening at this particular time, interest rates are going to stay low, because interest rates staying low means that people can borrow money at a cheaper rate. They can use that money to build their business and that type of thing. But unfortunately, it isn't working, because the fact is that the economies around the world are weak. There seems to be no enthusiasm in the markets whatsoever. The markets are up one day and down the next. There's basically very little direction. And at this particular point, it's the currency markets that are really telling the story. And in the United States, they're the only country that can raise interest rates. So we've seen 2 interest rate hikes so far this year. They said we're going to see at least 3. The U.S. dollar is up by half a penny today. There's no doubt in my mind that the U.S. dollar will continue to be the strongest currency and will go substantially higher than where it is right now. So the U.S. currency is a reserve currency. Everything is priced in U.S. dollars, basically: oil, commodities, gold, everything like that. So as long as the U.S. dollar remains strong, then the investments that we're making for our clients will continue to do very well. Obviously, the dollar backed off a little bit this week, but it has really no effect because the trend for the U.S. dollar is substantially higher. So the fact is that with a strong U.S. dollar, it normally is not good for gold. Like on a day like today, as we're taping the show on a Thursday, actually, I just got to Colorado. The fact is that gold is down $5.70 on the day, and the U.S. dollar is up just over half a penny. Now, normally, what will happen is when the U.S. dollar is strong, gold is not a good investment. But judging by what's happening in the world, gold is holding in there. In fact, there appears to be right now about a $250 premium in gold. And I think that's a war premium. I believe that at this particular point that investors are concerned about what's happening in the United States, how Trump is handling things, his aggressiveness towards other countries. For example, the bomb that he dropped on Syria and Afghanistan and the threats towards North Korea, that's keeping gold up. And gold has got about a $250 premium, in my opinion, to it because at this particular point, with the strength of the U.S. dollar, gold would be down to around 1,000 to 1,050, but we're trading at 1,255, which tells me that there's major investors out there that are holding gold and feel that it's imperative to hold gold in this type of scenario. And I'm one of those people that believe that also. The fact is that a lot of people get enamored with the stock market, and the U.S. stock market has been very strong. It's not that the economy in the United States is very strong. It's the fact that the U.S. economy is stronger than other currencies, which are mostly all in trouble. So the fact is that we anticipate that the U.S. dollar will continue to strengthen. I don't see anything at this point that's really going to derail the U.S. dollar except if something short-term happens to Trump, where he gets impeached or something ridiculous like that. But, one of the reasons that the U.S. dollar has not rallied as much as I anticipated is primarily because of the trouble that Trump seems to be in with Russia and these investigations and things like that. My personal feeling is that it's all going to go away. I believe that Trump is going to settle down and do a decent job, and I believe he's going to build and he's going to rebuild the infrastructure of the United States, and I think the U.S. dollar is going to continue to strengthen and get to well over par. In fact, nothing has changed as far as our analogy towards the U.S. dollar. So my recommendation at this particular point is to own U.S. dollars. They're way stronger than Canadian dollars. The Canadian economy is not in strong shape right now, but either is the European economy or the Australian economy or almost any economy. But the fact is that if the U.S. dollar is going to strengthen and the Canadian dollar is going to fall, we want to take advantage of that. Those are opportunities that come in the marketplace that if you know what you're doing, you could make an awful lot of money. Our clients are making over 25% a year on our U.S.-based investments, and that is available to all of our Canadian listeners to this radio show, that our investments are in U.S. dollars, and our Canadian clients who have been investing with me for up to 20 years now, what should I say, some of them as far as 35 years, and the fact is that we've done very, very well in the markets. Now, we're not speculators, we're not leveraging, we're not financing, we're not doing anything crazy. We're owning the assets that we own. We don't own paper. We own physical gold. We own physical diamonds. And some of the programs that my company offers that are private, that are in U.S. dollars, are involved with mining of rough-colored diamonds, which have done extremely well for the company and for our clients. So we're enthused business-wise as to what's happening with our firm and the returns that we're able to return to our clients. Most people out there don't know what to do at this point because, again, the market's up one day and down the next. You don't want to go into the U.S. stock market because the only reason the stock market's up is the only game in town, really. Foreign investors are pouring money into the U.S. market because their economies are doing so poorly and their stock markets are doing badly. The U.S. stock market is over 21,000, and it's actually gone up substantially since Trump has been in office. So I believe that what we really need to do at this particular point is we need to have investments based in U.S. dollars, and I can help you with that. The other situation we need to start buying gold right now. Even though gold's trading at $1,250, I see about a $300 move coming in the gold market. It could literally happen by the end of this year. So the fact is that we're going to have a phenomenon that happened, in my opinion, only once before, which is a strong U.S. dollar and a strong gold market. And I believe that's coming, and I think that we need to own some gold. Now, at this particular point, our gold program is phenomenal, but it's not for everybody because we cannot handle smaller amounts of gold. So basically, we're able to offer our clients kilos of 99.9% gold, absolutely stunning bars. And we will ship the gold directly to you. Now, when you buy gold, You buy at the ask and you sell at the bid. And there's a spread between the two, and that's how the dealers make their money. And then there's normally a commission on top of that. We don't do any of that. We own our own gold mines. So we're able to offer our clients our kilos of gold at bid price. So that means there's no spread between the bid and the ask. So you're not going to pay any spread, and you're not going to pay any commissions. And now you're saying to yourself, well, how in the world is he going to do that and make any money? Well, the fact is that my partners have been in the mining business for 4 generations, and they own their own gold mines. And basically, we're able to get gold slightly below spot, and we're able to turn those savings over to our clients. What we could literally do is we could ship the gold directly to you, so you own it outright, or we can store it for you in a Brinks or Malka Amit facility, which is licensed and bonded, and you'll get a warehouse receipt for your gold. And if you would like, I will even trade the gold for you and not charge you a commission on it. And the reason that we're doing this is that we called the biggest bull market in gold in history back in 2000. We were the only ones, along with John Embry, that told all of our clients to get out of every stock and every paper asset and buy gold at 250. And 11 years later, the biggest bull market in history, gold hit 1900. Then we saw gold pull back to around 1100, 1050 in that area, and it was actually an orchestrated move by the U.S. government and the exchanges. But now gold's trading back up at 1260, and I see about a $300 move coming in gold. And I could literally trade gold for you, charge you no commissions, and I think we would do extremely well. I know the gold market very well. I've traded it since it was in the back in the 70s. So again, I think there's tremendous opportunity. I think we need to own gold for sure at this particular point because, again, there's so many issues out there right now, Randy, that are concerning, and any one of them can turn the markets upside down. And there's a lot of experts that know the stock markets extremely well, and they're saying that, again, we've got a bubble, just like the bubble in the real estate market in Canada. We've got a bubble here in the United States in the stock market, and we could wake up any day and see that market down a few thousand points. So at this particular point, we need to hedge ourselves. We need to make certain that we're sitting in the right assets. If you're one of those that loves to trade the stock market and you're good at it, then fantastic. But most people are not. 90% of people that trade stocks or mutual funds lose their money. 90% of people that are in retirement savings plans have made no return in the last decade. And I can help you with that. We've got programs that return over 25% a year. Some of them are extremely conservative, and most of our clients that are invested in those programs are basically retiring off the income that they get from our 25% program. So, again, if you're a listener to the show and you want some information on how you can do better in the markets, how you can get out of Canadian dollar-based investments, including your retirement savings plans, and get into U.S.-based investments that are conservative, that will give you the type of returns that you need to retire, then I can certainly help you with that. We also need to be in gold. Again, a kilo of gold at this point here is between 40 and 50,000, so not everybody can afford that at this point, but it's imperative that we own gold with all the situations that are happening worldwide, Randy. And again, judging by what's in this fantastic newsletter again this week, there's a lot of issues out there that we should be concerned about.
Very much so. Connect with Harold at 1-800-432-1022. 1-800-432-1022. Call is free. Anything discussed, 100% confidential. How do you invest today so you can retire tomorrow? Take the time. Speak with Harold Siegel. He's there to help you. RareColoredDiamonds.com is his website. Our featured diamond of the week. We'll talk about diamonds in the second half of the show. Is a 1+ carat radiant cut fancy light blue. Later on this hour, we'll talk more about that featured diamond. It is an absolute beauty. If you would like to receive our free weekly newsletter, the companion to our radio show, encourage you to ask for it when you speak with Harold. We'll be happy to put your name on the list. We send it out via email, free of charge every week. If you'd like to receive it, you can go through it and be completely up to date on the financial markets in about 5 minutes, or spend hours if you choose. One of the stories we have this week, and it's a big one. Jim Rogers, who used to work with George Soros, one of the world's preeminent billionaires, and hedge fund managers. He went off on his own many, many years ago, has written many books, and become a worldwide authority on the financial markets and billionaire in his own right. Two different articles for you to read. The worst crash in our lifetime is coming, and the Fed is clueless and is setting us up for disaster. He was interviewed by Henry Blodgett from BusinessInsider.com and was asked what was going to be happening in the financial markets. And Jim Rogers said, "I learned very early in my investing career, I better not invest in what I want. I better invest in what's happening in the world." Harold has been teaching us that for years. Otherwise, Jim said, I'll be broke, dead broke. Well, what's going to happen? It's going to continue. Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse, and you should be very worried. He went on to be asked when. He said later this year or next, and he said write it down. He's making that prediction. Rogers went on to say, well, it's interesting because these things always start when you're not looking. In 2007, Iceland went broke. People said, Iceland? Is that a country? Do they have a market? And then Iceland went broke. And then Bear Stearns went broke, and Lehman Brothers went broke. They spiraled like that. Always happens when you're not looking. I don't know. It could be an American pension plan that goes broke, and many of them are broke, as you are well aware. It could be a country we're not watching. It could be any sort of thing that could trigger it. It could be a war, unlikely to be war, but it's going to be something. When you're watching and keeping an eye on business news, you'll see it, and you'll go, aha, that is the thing. And Jim Rogers really believes that this crash could be the worst in our lifetime. And he says it's going to be the biggest in his lifetime. It's going to be serious stuff. He says we've had financial problems in America, and usually it's about every 4 to 7 years that you have some sort of financial bust-up. Well, it's been 8 years since the last one. This is the longest or second longest in recorded history, so it's coming. And the next time it comes, in 2008, we had a problem because of debt. And then the debt that was around then is nothing compared to what we have today. In 2008, the Chinese had a lot of money saved for a rainy day. It started raining. They started spending the money. Now even the Chinese have debt, and the debt is much higher. The Federal Reserves, the central banks in America, the balance sheet is up over 4 times since 2008. It's going to be the worst in your lifetime, my lifetime. Be very, very worried. That from Jim Rogers. And even Harold, if he is 25% right, 50% right, we are long overdue for a major stock market correction, some sort of financial crisis of some sort. And the truth of the matter is, if these things come, we know we want to be in gold. We want to be in hard assets. Gold, silver, diamonds. Those are the things that did very well back in the last crash and financial meltdown in 2007 and 2008. And now is the time to put that insurance policy in your portfolio. Do it prior to this happening. Don't wait until it happens. Now is the time to make a move, and we have about 4 minutes left in our segment here.
You bet, Randy. I'd rather be a year early than a minute late, because the fact is that once the market starts to go, it's very, very difficult to catch. I've been in this business 35 years. I've seen all types of markets. I've seen when markets start to crash, and they're almost impossible to catch. So the most important thing, and the thing that this show has been almost famous for, is picking trends. Not just an individual stock or an individual move. We had an 11-year bull market in gold. We had clients that made absolute fortunes in that market. We caught a trend in oil from $18 to $150, and we caught the trend in the euro when it first started. We caught the whole trend in diamonds when that started. So I don't look for small little moves. I look for something that's going to be substantial, that we don't have to go in and out of the markets and trade. I want to be a buy and hold type of situation, and that's what we have in gold right now. There's no doubt that gold is one of the most important assets you could own right now because of all the reasons that Randy just gave you. The fact is that some of these analysts, like Rogers he's one of the most brilliant men there is, and he's caught markets and trends in his lifetime that defy description. So that's what we're looking for, and they don't come easy. But the fact is that there are clues in the marketplace, and we have been very successful at picking these trends. I see about a $300 move on the upside coming to gold, and I want to take advantage of that. We can make an awful lot of money in the gold market if we get a $300 move. So get in touch with us so we can discuss this with you, show you our game plan, and see if this is right for you.
1-800-432-1022. 1-800-432-1022. How can you invest today so you can retire tomorrow? Speak with Harold. He'll be happy to speak with you personally and privately. Give that number a call, 1-800-432-1022. The website is rarecoloreddiamonds.com. Some interesting news coming out of Canada this week. Well, we expected it would happen eventually when they put the curbs in place. Canadian home prices could fall 20 to 40% over the next 5 years, warns Capital Economics. The hot housing markets in Vancouver and Toronto appear to be on the verge of a severe downturn that could hit the Canadian economy and its growth, according to senior Canadian economist at Capital Economics, David Medani. And he sees a correction between 20 to 40% in the Canadian housing market over the next 5 years. And he says that the current hot housing market in Vancouver and Toronto are in a speculation-fueled bubble that appears to be on the verge of bursting. Another thing that came out this week, realtors see troubling downturn in Toronto, the housing market there, as sales dropped 44%. New data suggests that rapid declines in Toronto home sales are accelerating, and at least one housing bear sees the Canadian real estate correction coming of up to 40%. And that's what we just obviously mentioned about Mr. Medani. One of the stories, too, that, let's face it, Sears, one of those companies that has been around for a long, long time, and who would have ever thought that Sears would go out of business? But former Sears CEO, Sears Canada may not make it through the year. The former CEO, and his name is Mark Cohn, he was at the helm from 2001 to 2004, said it's hard to imagine a scenario where the company survives as an independent entity. It has cast doubt on its ability to continue as a going concern, not just in Canada, but the United States. So we are in changing times, and this means you need to change how you invest your money, and that's where Harold Siegel comes in. Connect with him. He'll be happy to help you start making money today in the different programs that he has. Connect with him, 1-800-432-1022. We're going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on June 15, 2017. Our time is 9:04 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're portable. We go anywhere with the podcast and you. And the shows are archived and streaming live on Harold's website, rarecoloreddiamonds.com. Get our free weekly newsletter, companion to the radio show. It's a must-read every week. You'll be seeing the material that Harold and I are perusing and using for the show. 1-800-432-1022, 1-800-432-1022 to connect with Harold. This week, the Fed raised rates in the United States. I think they have one more to go this year and possibly 3 to 4 next year. They're at 1.25 points. In Canada, we're at 0.5 point. The Bank of Canada did a little jawboning this week and jawboned the loonie up to about, it went from about 74 up to 76. It's around 75.5 as we speak right now. But the Bank of Canada talking the loonie up, more than likely not going to last. One of the featured diamonds of the week that we have is really a beauty. This is something that would be a beautiful, beautiful addition to anyone's diamond portfolio. Featured diamond from rarecoloreddiamonds.com is a 1+ carat radiant cut fancy light blue. See it online, rarecoloreddiamonds.com, featured diamond of the week. It is the type of diamond that you see very rare because it's a 1+ carat cut fancy light blue. And Harold, this diamond is, it's very, very beautiful. It's one of those diamonds that fits into nature's art. Absolutely gorgeous.
You bet. And judging by how well blue diamonds have done over the last 10 to 12 years, even though it's a light blue, which I personally love because it's such a soft, beautiful color, but blue diamonds are amongst the best investments you could ever make. I mean, blue diamonds have gone up more than any diamond has ever increased in value in such a short period of time. I remember back in 2005, there was an auction, and a vivid blue, fairly large diamond sold for around $200,000 a carat, and it was noteworthy at that particular point. So that was in 2005. By 2016, we were reporting on diamonds, blue diamonds, that were selling for $5 million a carat. That's how much those diamonds went up in value within that period of time. So the fact is that the worse the economies get and the major fears around the world, the more these diamonds take on a different life. Again, they're not short-term investments, they're long-term investments. But so is a retirement savings plan. You don't just want to buy a diamond for a couple of years and sell it. You're not going to do well with it. You need to own it for a long time. The best example I can give you is what happened with Shirley Temple. Her father bought her a diamond back in 1940, a beautiful deep blue diamond, basically for around $7,100. Now, that was a long time ago. It was in 1940, so that was 66 years ago in 2016. Do you know that diamond, over that 66-year period, went from $7,100 to where it sold for $25 million last year? So when you're trying to build wealth within a family, you hear the term old money. It means it's money handed down from generation to generation. You know, it's the great-grandparents that did well, then the grandparents, it was handed down to them, then the parents, and then to the kids type of thing. And this is where diamonds fall into it, because the longer you hold them and the more rare that they become, the amount of money that it could be made on these is astronomical. And if you don't need the money yourself, if it's something that's sitting in your family portfolio that you're going to hand over to your children so they can do well, it just keeps doing better and better and better. So the fact is that you want to own certain diamonds. Not all diamonds are investment quality. In fact, not all colored diamonds are investment quality. Very few are. What you're looking at right now, here's what the way that we look at the diamond market. In the colored diamond market, you've got the yellow diamonds. Yellow diamonds turn yellow because of nitrogen. Basically, there's all different colors of yellow, but the three best colors are fancy yellow, fancy intense yellow, and fancy vivid yellow. The higher the saturation, the more valuable the diamond becomes. In the yellow diamond, it's also very important to have a strong clarity. All of our yellow diamonds are internally flawless. So we find that these yellow diamonds, the fancy yellows, the fancy intenses especially, go up by about 15% a year. So when I say to hold on to these for a long time, if you just keep them in your portfolio for 20, 30 years, you're talking about an opportunity to make an awful lot of money on an asset that you own, that's in your possession, that's not a piece of paper, that is absolutely beautiful, that could be put into a ring or a necklace or whatever. It's just a perfect asset. And the fact is that these diamonds go up substantially in value. So after the yellow diamonds, we start to look at the pink diamonds. Now, pink diamonds, in my opinion, are about the best investment you could make right now, because 95% of all pink diamonds come from one mine in Western Australia. It's called the Argyle Mine. That mine produces 95% of the world's pinks, and it's about to close its doors. It's just not producing anymore, so it doesn't pay to keep the mine open. Out of all these diamonds that come out of that mine, most of them are low-grade industrial white diamonds. Only a handful of them are these magnificent pinks. And because the mine is about to close in less than 3 years, we anticipate that the price of pink diamonds could increase substantially, 100, 200, 300% possibly, depending on the size and the quality of the diamond and the color. But you will not be able to get pink diamonds anymore unless you go to auction, and they will sell for, tremendous amounts of money. So we feel that one of the best investments you can make right now are in pink diamonds. Now, again, they're not for everybody because they're not cheap. They've gone up in the last 5 or 10 years substantially, but the next 3 to 5 to 10 years are going to be the biggest moves because there won't be any more. So we suggest pink diamonds from the Argyle mine, and those diamonds start in about the 30 to 40 to 50,000 range, but they could end up being worth substantially more than what you paid for them. These diamonds never decline in value, and they're priced and sold in U.S. dollars at this point. However, another major asset, a reason to own diamonds, they could be sold in other currencies. So if we find that the British pound or the Japanese yen or the Chinese yuan or whatever is a better currency, it's simply a matter of trying to sell the diamond in that country and collecting that currency instead of a weaker currency. So we're ecstatic about what's happening. The next major trends in diamonds, blues, have made astronomical moves, and not that there's any end in sight type of thing, but the fact is that there's so few blue diamonds available that once they do come on the marketplace, they sell for an absolute fortune. So we think the next major trend in diamonds after the pinks is going to be in green and orange diamonds. Extremely difficult to get. Green diamonds turn green because uranium turns them green. Orange diamonds turn orange because of nitrogen. These are so rare, and the prices can increase so substantially that a vivid green diamond sold last year. Very seldom have we ever seen a green diamond ever hit the auction blocks. But a 5-carat vivid green called the Aurora Green sold last year for $3 million a carat, over $15 million for that diamond. That's what we're anticipating out of the diamond market. We think that the next major trends are in orange diamonds and green diamonds, and we have those diamonds. We mine those type of diamonds. On top of that, we have programs that we allow that our clients to invest with us as partners, where we buy rough diamonds like greens and oranges, and we just bought a red diamond, and we just cut that diamond, and it was absolutely spectacular. We own orange diamonds. We invested heavily in green diamonds because we believe that that's the next major trend in diamonds, are greens and oranges, and we want our clients to get in close to the ground floor. It's not like the real estate market in Canada. Look what's happening. Every day we are hearing how much the real estate market in Toronto and Vancouver was going up, especially in Toronto. It was skyrocketing. I remember 1 month recently that the real estate market in Toronto went up by 33%. That's almost impossible in a marketplace. So you knew that had to be coming to an end. The speculation was just out of control, and people were buying homes and real estate when they shouldn't have, because they don't know anything about timing or the market. And now look what's happening. The markets are plummeting. People are trying to liquidate their homes that they bought for speculation, and there's no market. There's not going to be a market in the real estate market in Toronto till the market drops 40 or 50%. So we don't want to be in those type of markets. Homes are a mass market. Diamonds are not. The whole year supply of pink diamonds from the Argyle mine would fit in a champagne flute. That's how small the market is. But the real estate market, where it can absolutely plummet, you'll never see that because there are no two diamonds the same. And the fact is that only one out of every 100,000 diamonds that are mined are colored, and not all colored diamonds are investor quality. For example, you may own a yellow diamond that's a VS1 or an SI1. That's a common diamond. That diamond's not going to go up much in value. I mean, not to the extent that a flawless yellow would. So, again, we're ecstatic about what's happening in the alternative asset market. That's where we put most of our money, and that's where most of our clients do. We're involved in mining. We let our clients basically be our partners in certain diamonds that we're mining. And those type of things can double your money, in less than 2 years. We've got other programs that involved in natural diamonds type of thing and mining of diamonds, where our clients get a return of 24-25% a year and get paid monthly. You could literally retire off of those two investments. So, again, we have these opportunities for our Canadian clients. We think they're the best opportunities out there. We don't trade paper. We don't trade stocks. We don't do anything that is risky. We don't leverage. We don't finance. When we're selling gold to our clients, we believe now's the time to buy it. We're going to sell you gold with no spread, no commission, and I'll even trade it for you and not charge you for storage or trading. So this is what we've done for our clients. We've caught some of the biggest trends ever. In fact, everybody laughed at us in 2000 when we recommended gold. We said it was going to skyrocket. Nobody believed it. It went from $250 to $1,900, and literal fortunes were made in that market. And now we think that we're getting ready for another major move in gold. Please give me a call. I'll explain all about our programs to you, how you can get involved. Nobody can sell you gold at the price that we can. Nobody can. No commission, no spread, no storage. We'll trade it for you, and we won't even charge you a commission on that. And I'm not bragging, but I've called some of the biggest markets, and gold is one of my favorite markets to trade, and I think we got a big move coming up. So, Randy, I think we're just in great shape right now, where there's so much uncertainty in the world, where there's very few investments that are turning out strong, that are not speculative and risky, and our investments aren't. But we've been able to do the right thing, and we've been able to get substantial returns, where many of our older clients are literally retired off our natural diamond investment program that pays 24% a year, where our clients get paid monthly. So, again, I just think at this particular point, if you don't know what you're doing, you're best off to do nothing. If you want to learn how to make money in the U.S. dollar and get into some of our private programs, it doesn't matter how much money you have. I'll sit down and talk to you over the phone and explain what your opportunities are. Now, maybe, that you wouldn't be able to financially afford some of these investments because they do have minimums, but the fact is that most of our clients can't afford them. So, again, I'm very excited to speak to all of you. I'm in Colorado for the next 4 months because my home in Florida, it's hurricane season. We just don't live there. It's way too dangerous. So, again, I work every day. I take calls from clients every day, and we're here to help.
Lots of financial questions today with so many people looking for answers. If you're looking for answers, connect with Harold. There was a great quote that I found this week from Sir John Templeton. It is impossible to produce a superior performance, and he's talking about investment performance, unless you do something different from the majority. And that's what Harold has done for many, many years of his career, something different than the majority, and the results have been proven out. As he touched on, 2000, we had gold at $250, all the way up to 1920 and 2011, and silver at $4 all the way to $49. Oil, we had obviously the diamond market, the euro, we had the collectible coins, so many different winners, but these are not investments where you make the investment and overnight it's going to double, triple, or quadruple. I wish that was the case for all of us, but it doesn't work that way. It takes time, as you could see even with the gold bull market, 2000 all the way to 2011. If you know you're in the right trend, as Harold has always said, the trend is our friend, ride it, invest in it, and ride it until conclusion. Connect with Harold at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. And it's interesting to note some quotes we have in this week's diamond section of our newsletter. David Farron, CEO of Linney's. Pink diamond prices have tripled over the past 15 years and on average would be at least 25 to 30 times the value of white diamonds, according to David Farron, CEO of Linney's. In 1817, R.J. Hay, an eminent French mineralogist, wrote, "Gems are the flowers of the mineral kingdom. Fancy-colored diamonds are the orchids. Fancy-colored diamonds, like orchids, are very exotic, truly exotic, and rare beauties of nature." Stephen Hofer, he said, "I have come to the realization that colored diamonds or other gemstones should be considered as a unique and individual piece of work of art, and second, as a commodity to be analyzed, computerized, and categorized." S.H. Ball, "Exceptionally fine colored diamonds have no fixed price, and with fine paintings, set rules do not hold." There was a DVD that Harold offered a number of years ago. It was the Diamond DVD from PBS, the Nature series. There was a quote there. They said, "Diamonds are nature's art, nature's most beautiful art. Every stone is a story. Every stone tells a story." R. Winston, "A colored diamond is a touchstone of the universe, a little something God created that man can't always find. They are the last frontier of collectibles." He also said, "I remember that stone. It was an incredible color. It had its own personality. I've never seen another one quite like it," meaning the rarity of diamonds. And probably one of the best quotes is from Evelyn Walsh McLean, "Queen of Diamonds, early owner of the Hope Diamond. After all," she said, "really it is an investment, but it's only when the thing I buy creates a show for those around me, obviously having the diamond on, that I get my money's worth." And Harold, so many people get their money's worth with rare colored diamonds because they're an investment, but they are so beautiful to obviously wear out in public.
You bet, Randy. And a lot of times look at what the very wealthy are doing, and that'll give you an indication as to what the trends are. And right now at auction, and this has been happening for the last several years, especially after 2011 and 2008, when the markets just absolutely crumbled. But diamonds have been selling for record prices. I mean, at such a high level. And this is not a bubble because, there's none of these are one of a kind. There's not 20 of these diamonds. There's only one of them. But these diamonds have been selling for 20, 25, 30, 50, 60. Some diamonds recently sold for $70 million. And when you're looking at people that can afford those type of diamonds, why would they buy that? Why would they put $72 million into a diamond? The reason is that they make money. It's a long-term investment. It's got so many benefits. They can be sold in other currencies as portable private wealth. You never know when something's going to happen. Look at the good people of Greece. They had so much financial issues that their banks were closed, their ATMs were closed, nobody could get to their money. But if you owned a diamond, you cross the border, you sell the diamond, you got cash, you're back in business again, and everything is good. But if you don't have an asset like that could be sold, you're dead in the water. And most people are not thinking along the lines of alternative investments. They're thinking about what they need to do. In actual fact, most people are so concerned about their investments right now that they're willing to speculate, and speculation right now is the worst thing that you could do. To leverage your investments, 99% of the people lose that way. We would never recommend you do that. You don't finance your gold or silver. You buy it outright and own it. You may not make as much money, but the fact is that, when the market, leverage can work for you, leverage can work against you. When the market's going your way, yes, you're going to make a lot more money. But as soon as it turns around and falls, that leverage is going to kill you. So we don't do that. We never put ourselves or our clients in a position to where we could lose more money than we put into an investment. And that's what most people are faced with right now. We don't want to speculate, and we don't want to be in risky investments. We want to hold the type of investments that have track records that make sense during these particular times. And what makes sense right now is holding assets that could be sold in other currencies that don't decline in value. The thing about making an investment, it's one thing about capital preservation. You want to hold on to your money. You don't want to lose it. Obviously, we want capital appreciation. We want the investment to go up so we can make money. But the most important thing is not losing your money. That is the way that I look at investments. That's why I'm so conservative and I don't take unnecessary risks. So when I make a recommendation to a client, it's not to put yourself into a position to where you could either make a fortune or lose a fortune. We don't do that. We look at investments that are strong for specific reason. And right now, you want to look at the gold market because of world situations. There's no doubt that there's problems that are happening every day. With Donald Trump as president, I think that we need to own gold. We're going to wake up one morning and all hell is going to break loose in the market. And if you don't own gold, you're going to start to chase it. We don't want to chase it. We want to own the market outright. We want to own it at good levels, which are the levels that it's at right now. We've got a very good chance of going back to 1900, which is a $700 move from where it is right now. And gold should have broken 2000. Gold should have gone to 2500 or higher if the government didn't get involved in the market and manipulate it down. So there's no doubt in my mind that we're going to take out 1920 in gold. We're also going to take out 2500, and it's not impossible to see gold at 4,000 to 5,000. There's situations in the market right now that could make gold go to there. One of them is the derivatives market. The derivatives market is so risky. It's in the quadrillions of dollars. Most people don't understand it even, and it's a market that's unregulated. That is a recipe for disaster. We saw a glimpse of it back in 2008 when Lehman went under because they were in the derivatives market and couldn't liquidate, and look what happened to that. They lost everything. Same thing with Bear Stearns. Most of these brokerage firms own derivatives, but they don't know how to get out of them. I know that sounds silly, but they just don't. And it's not a regulated market. So we could wake up one day like we did in 2008 and see the markets absolutely crumble. By the way, while everybody was losing money, a fortune in the stock market back in 2008 and 9, our clients were making fortunes in gold. Gold went up all the way to 1900 during that whole debacle. We were in that market right from 250, and while everybody was panicking because of the financial markets and the currency markets and everything, we were sitting in gold and making an absolute fortune. And I see the same thing coming our way right now. We need to own gold. I can help you with that. Right now it's for larger investors that can afford to buy kilos of physical gold. Eventually we'll have smaller amounts for you, but right now we can sell you kilos of gold at the bid price with no commission, no spread, and I'll even trade it for you and not charge you a commission. I think we've got a great opportunity in the hard asset market, Randy, to make a literal fortune over the next 5 years.
Speak with Harold, learn more. Everyone wants to obviously retire at some point, and it's very hard to retire in the financial world that we find ourselves in today. We had that quote last week from Bill Gross. Bond fund king from Janus, used to be with PIMCO. He said, the problem is right now everyone's buying high. It's buy low, sell high. He says everyone's buying high and crossing their fingers. And he said that is not the way to invest. We believe the assets that we're offering, you're not buying high. And these are an insurance policy in your portfolio that will profit and protect you for the future, whatever may happen, good or bad. And if you'd like to learn more about how you can invest today so you can retire tomorrow, connect with Harold, 1-800-432-1022. RareColoredDiamonds.com is the website. Our featured diamond of the week is a 1+ carat radiant cut fancy light blue. See it online, RareColoredDiamonds.com. Featured diamond of the week. And the thing that is the beauty of diamonds, investable diamonds, they're not like stock certificates or bonds or T-bills. This is something that you can hold in your hand and obviously cherish at the same time. And Harold, hard to believe we've got 30 seconds left and another great show. Thank you, sir.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Remember, Harold is there to take your calls. He'll be happy to speak to any radio listeners at any point in time. If you'd like to connect with him, mark this number down. Free of charge, the call, 1-800-432-1022, 1-800-432-1022, and it's confidential, anything discussed. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and definitely take a look at our featured Diamond of the Week. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.